Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 26th of June, 2022. And we are repeating the video we produced yesterday, which is our normal weekly update, but we are using a different thumbnail and heading. We can see that gold and silver prices fell last week, while equity markets and cryptocurrencies rose. Why has this happened? We'll cover that in this video. What is also important is the economic data being published towards the latter end of this coming week, and then ultimately the FOMC decision on interest rates in July. So let's take a look. Gold fell $12, falling from $1840 to $1,828, having hit a high of $1,848 and a low of $1,818, a fall of 0.7%. In sterling terms, it finished the week at £1,490, that's down £16, and in euros it closed at €1,732, that's down €21. Silver fell 51 cents, falling from 21.69 to 21.18, having hit a high of 21.95 and a low of $20.66, a fall of 2.4%, nearly 2.5%. In sterling terms, silver closed at £17.27, that's down 49 pence, or virtually half a pound on the week, and in euros it closed at 20.07 euros, that's down 0.59 euros. Of course, because of this, the gold-silver ratio rose, and it rose from 84.9 to 1 to 86.3 to 1. Now, looking at the prediction we made last week, we stated we expect to see gold trade between 1790 and 1890, with 1760 and 1920 as outliers, and we forecast silver to trade between $20.75 and $22, with $20 and $22.75 as outliers. Well, gold traded, in fact, within a very tight range of just $30 last week, and so operated well within our predicted normal range. Silver traded within a slightly proportionately wider range of some $1.29, again though falling within our normal trading range, save for a few minutes or maybe half an hour when it fell into our outlier range by 9 cents. Moving on to other financials, Bitcoin has risen this past week by $1,753 and currently stands at $21,114. You may hear thunder in the background. I'm not sure if it will appear on this tape, but I mentioned Bitcoin and the heavens open up. Equities too staged a reasonable recovery last week. The Dow Jones closed on Friday at 31,500, that's up 823 points on the day, and up 1,612 points on the week. It's worth bearing in mind that the previous 2 weeks it had fallen well over 3,000 points though, so it's only made up about half of those 2 weeks' losses. The S&P 500 closed at 3,911, up 116 points on the day and up 237 on the week, and the Nasdaq Composite closed at 11,607, up 375 points on the day and up 809 points on the week. Moving over to oils, interesting. Brent crude closed at $113.12, that's unchanged. And WTI crude closed at $107.62, and that's down $1.94 on the week. At some stage, these two the gap between them will close. Whether that will mean Brent will come down or WTI will go up remains to be seen. Now, importantly, the dollar index is still standing above 104, and it's at 104.18. That's down, admittedly, 0.52 points on the week, but is holding quite steadily at this 103 to 105 level. Now, what's happened since our last report? Well, we saw existing home sales for May fall by 0.19 million, but was in line with expectations. Initial jobless claims fell slightly, but manufacturing flash and services PMIs for June were a few points lower than what was expected. New home sales for May were, however, some 109,000 higher than what was anticipated. But an interesting week this week, particularly towards the end, although we cannot ignore the beginning. On Monday, we have durable goods orders for May and pending home sales for May. On Tuesday, we have the advanced trading goods and consumer confidence index for June. Then on Wednesday, worth noting this, GDP and GDI, that's gross domestic income revision for quarter one. See if there's any great disparity between the original estimates. And then on Thursday, the most important day, we have the weekly jobless claims, core PCE inflation for May, monthly and year on year, real disposable incomes and real consumer spending. And then on Friday, another useful and important day, we have the S&P and ISM manufacturing PMIs and indices. So really, Thursday in terms of economic data is by far the most important day and the one most likely to affect precious metal prices. The PCE data will, to some extent, provide us with a strong indication as to what the FOMC will do in terms of interest rates later in July. So let's now take another look at gold and silver from a technical point of view. Last week, Jerome Powell gave Congress a rather depressing picture of the economic outlook for the United States in terms of GDP and the prospect of continuing interest rate increases. One could argue that the main priority for the Fed now is controlling inflation, and that will come at a price, a higher dollar and higher rates, and therefore quite likely lower precious metal prices and potentially short-term lower equity prices too. Powell even mentioned that the medicine the Fed will provide could potentially push the United States into a recession. Yes, inflation may help gold, but the tools used to curb it, i.e. interest rates, will hinder its progress and potentially put it into reverse. It's certainly not going to help silver either, and if global demand is affected because of a potential recession, silver's in a double jeopardy situation. Now, technically, gold has some support at 1800, but much stronger support at the good old 1750 level. Remember that? A few months ago, we were very dependent on that being strong support. We also cannot rule out 1700 when the interest rate decision is upon us. Resistance is seen initially at 1850, which was previous support, followed by 1880. And should this break, then 1900 is the next call. Silver has resistance at 2150 and then 22 above it, with a number of points ultimately leading to 2350. So should there be a shift in sentiment, you could see a reasonable rise from 22 plus to 2350. We'll express in a minute why we don't think that's going to happen though, but it's potentially there. To the downside, we have a significant number of points down towards $20, and should that break in a meaningful way, $18 is seen as the ultimate floor, at least for the next couple of months. Now, we suspect we're off that level during the next week or so. In other words, it won't quite go down to that level. But as the next FOMC decision looms, and depending on the economic data that comes out between now and then, we cannot hand on heart say that $18 will not be reached by the end of July. We can most certainly, though, predict some volatility in the weeks ahead. So, in view of all this, what can we really expect to happen to gold and silver prices this coming week? Well, not allowing for any change in geopolitics, we still have the Russia-Ukraine war going on. We also have a number of other infractions, incursions, and political upsets. But if we assume that they remain relatively as they are now, we expect to see gold trade between 1780 and 1880. In other words, dipping slightly, with 1765 to 1900 as outliers. And we see silver trading between $20 and $22, so a little bit more to the downside, with roughly 1950 to 2250 as outliers. If we wanted to be 100% safe, we'd say $19 to 23. But whilst we're expecting a few moves, certainly Thursday, Friday, 1950 should hold. What do you think? Do share your thoughts, please. Thank you so much for listening. If you haven't done so, give us a thumbs up, subscribe, press the bell sign. Have a safe, enjoyable weekend. Prosperous week ahead as always. And tomorrow we shall be repeating this video under a different thumbnail and headline. Thank you for listening. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.